All right. Well, welcome to the mortgage update with Mike and Joe. Um, Joe, it's exciting. Obviously, we're just about to embark on the summer.
Yeah.
It's right around the um, corner, and obviously, kids are going to be getting out of school. But obviously, we're here today to talk about the market, what's going on in Rochester and Syracuse. So we're, excited, to give it an update, to our group. And I think one of the things that we've been doing a lot of this year, Joe, as you know, is we've been hosting a lot of workshops and seminars to really first and foremost keep our realtors informed on the data, right? And
Yep.
It seems like each month, it's helpful, for us. It's also helpful for our partners to stay current with this. And Joe, before I asked you kind of to give us an update on what the data is telling us, is to remind everyone that the information that Joe is going to share with you, please reach out to your GRB lender. This is something that we want to share with you because, again, what this does is it tells you what's going on for the applications that we took last month by zip code, the average purchase or the average list price, the average contract price, and if any of those homes did not appraise for what they sold for. So,
Right.
So Joe, with that preamble, I'm going to turn this over to you and kind of share with the group what we learned from May.
Yeah. So, as you said, data is very powerful. Using that data to help you negotiate and win offers helps. And I think, realtors, can get this data out of the MLS system. However, it's not until the transaction closes. So our data is a little bit more real time in that we're tracking applications that came in
Right.
and providing those results. Those transactions probably won't be closing until late June, early July. So if you're writing offers in June, you can kind of leverage this data to see what the market was doing last month when those offers got accepted. So, for Monroe County, every time we do this, I'm a little bit more and more surprised that these numbers keep going up. So
Market's hot.
we had 3 zip codes in Monroe County, 50% plus over list.
Say that again, Joe.
We had 3 zip codes where the homes sold 50% more than the list price in Monroe County in May. Was 14619, 14625, and 14613. Now, we had one sale in each zip code, right? But that tells you that one sale went 50% over list or more. The highest was 68%.
Right.
Then we had 4 zip codes. If you look at Monroe and surrounding, there were 4 zip codes where that occurred. One more zip code throwing that in there was actually Walworth, Wayne County, 14568. That went 50% plus over list as well. Now, when we zoom out a little bit, 42% of the zip codes in Monroe County were 20% over list. 34% of the zip codes in Monroe County and surrounding were 20% or more over list. So, that's a good way. 50%, roughly 42% of the zip codes where home sales are happening are going at least 20% or more over list.
And Joe, just to put this into context, when I was reviewing this last month in May in the greater Rochester area, we did 139 purchase transactions. And I think, and obviously, so that's a fairly large number of purchase transactions. I think one of the things that I wanted to ask you is, we get a lot of questions about appraisals, right?
Yep.
The property is listed for X. They want to offer, 10, 20, 30% above, the list price. What did we experience last month in regards to appraisals?
So out of those 139, we had 1 appraisal issue in Monroe and surrounding.
So I think that's interesting to point out, because obviously,
and that was $6,000 delta.
So it wasn't
it's not
really
like
that,
it was a
that
huge
large
delta. Yeah.
So appraisers are finding comps to support these values.
Yep.
Okay.
And I think just, tailing off here. So we had 10 sales in Fairport, 14450. In that zip code, there were 18% over list. 4 sales in Penfield, 14526, 17% over list. Now, those list prices are a lot higher, right? You're talking about 370 to 380 average list price in those zip codes. So that 18% or 17% is almost more than the 50% in the 14619 zip code. And then in 14609, that was where we had the most offers. There was 12 sales in that zip code, or the most transactions, and that was a 16% over list. Interestingly enough, there were 2 FHA offers accepted. So in as hot of a market where there's 12 offers that we're seeing come in, 2 of them were accepted as FHA. So that's good.
That's great.
So for all in all, May, the average for Monroe County over list was 19%, with an average list price of $252,000. That means that homes are going about $42,000, $43,000 over list in Monroe County. And then if we zoom out to Monroe and surrounding, 17.3%. So it dips a little bit. At this time last year in Monroe County, we were at 14.5% over lists, with an average list price of $218,900. So average list price is up, percentage over list is up, right? It's again, re-echoing the message that we've been talking about for the last 11, I think this is episode 11. So the last 10 episodes of our podcast, right? Now
let's go to our friends down the throughway.
Yeah, right. So this, it's a tale of 2 counties, right? Now we're down the throughway. The numbers don't look anything like they do in Rochester. The highest over list in Onondaga County was 28% over. We had 3 zip codes in Onondaga County that were 15% or more over. 30% of those zip codes are 10% plus, so 10% over versus we saw 20% over in 42% of our zip codes. And Baldwinsville was the hottest, 11.46% over. So not the hottest from a percentage perspective, but that average list price is $389,900. So again, similar to that Penfield Fairport market, where that average list price is higher, so that percentage over is a lot more than what you would typically see. And again, I mean, Onondaga for the entire month was 6% over list. The month before was 9%. Right. So we see actually a little bit of a dip. So again, that tale of 2 counties, and now we're down the throughway. And then last year at this time, it was 4.5%. So it's still a little uptick up. Average list price is roughly about the same.
Okay. So Joe, let's, before we move on from this, I think it's important that we kind of remind everybody, about how you as the realtor can use this with your buyer. We've worked, as you know, Joe, we've worked with, and our folks have worked with several buyers that have lost out on 5, 6, 7, 8, 9, 10 homes, and they're getting frustrated, and we're going to talk in a bit about the success that we've had with our Cash Plus program and how that can help them. But as a realtor, how can they use this data to make their buyer more informed? So you were talking, for instance, about Fairport, there were 12 homes sold. In terms of prepping that buyer in what they're probably going to need to be prepared to do to win in this environment.
Yeah, I mean, I look at it like somebody who's shopping for something online, right? I got to buy a new drill.
Right.
I'm going to go look online and see who is the best price, and it gives me an idea of what's the market for that drill that I'm looking at buying, right? And if you're looking at a home, if we have this data and we can share this data with the borrowers to say, or the buyers to say, hey, okay, you want to look in Penfield. Okay, in Penfield, this is what the average list price looks like. This is what the average over list is going for. It helps to prepare them for, you're not going to go out there and get this house at list price, right? And what we've seen success with is our loan officers echoing that same message with the referral partner. So now not only they're hearing it from the real estate agent, they're hearing it from another person, right? That second opinion, that second voice, it helps to reassure the borrower that nobody's out to get you here, but this is what the market looks like. And this is what you need to do if you want to buy, and if you're serious about buying now. And once they kind of hear that from 2 people, maybe 3 people, maybe there's a third person in there that gives them that same message. Now they're starting to get a little more comfortable. And, we've heard from some of our agents in these roundtables, sometimes it takes them, writing 2 or 3 offers before they realize okay, I need to go over. This is a way to kind of maybe skip that step to say, this is what the data is telling us. And, in order to win, this is where you want to go.
Right. Okay. All right. So again, for those that are listening in, if you want access to this, just please reach out to us. We'll share this data with you each month. And And please let us know if there's any other data that we can share with you that would be helpful. All right, so Joe, let's shift gears. So I'm excited to talk about Cash Plus. We've really just kind of crossed the 1 year mark since we launched this. We've been doing this for a little bit more than a year. And just to remind everybody, we launched Cash Plus to really put our buyers in the best possible position to win and frankly compete with cash. I mean, there's still a tremendous number of cash offers that are going on. So what we wanted to do now is just to really kind of reinforce what the criteria is for that program, Joe. And then once we have a chance to kind of go through that again, is most importantly is to talk about the success that we've had with it as well.
Yeah. So, with our Cash Plus program, right, it is a borrower who has the ability to put a 10% earnest money deposit.
Okay.
So when they write that
down.
contract, they're writing a 10% earnest money deposit.
Okay.
Now, they can do a 5% down mortgage if they need to, but that deposit has to be 10%. Again, trying to help that offer, stand out as much as possible.
Right.
What we do is, that and a 700 credit score, right? Primary home, second home, conventional financing for that product or our portfolio product.
Right.
And those borrowers, when they write that offer, they're putting that. But what we do on our end is we fully underwrite them. So we issue them a full mortgage commitment, subject to them finding a house and an appraisal on the property. Now, that appraisal has a caveat to it. If the borrower is willing to guarantee the appraisal, basically saying if the appraisal comes in short, I will cover the difference in cash, then that is no longer subject to the appraisal. We have to have an appraisal done. That the seller has to be willing to let an appraiser in the house to do an appraisal. But again, that contingency on the home actually appraising at the value, if that borrower guarantees it, kind of goes out the window, right? It's the appraisal gap, which we've all been very common to understand.
So Joe, to be clear, if the buyer is willing to guarantee if the appraisal comes in short, which we just talked about, at least for the month of May, that only happened once,
right,
in Monroe County, can that offer be written as that the mortgage contingency is satisfied?
Correct. Yeah, because they have mortgage commitment in hand, and that deal is no longer subject to the appraisal, right?
Okay.
So they can write that without a mortgage contingency at that point.
Okay.
What we're trying to do and what we've done with this product, what we set out to do with this product, is really instill confidence in the buyer, in the seller, and our referral partners and the agents in the marketplace. We look at and we track the data around this just like we track everything else. We've done, over the last year, we've done 348 of these Cash Plus or pre-approval approvals, right? We've issued 348 of these letters. Out of those 348, 57% have converted into contracts, right?
So what was that, about 100?
198, almost, yeah. So almost 200 of those have gone under contract.
That's great.
And when we look at those numbers, out of those 200, none of them have gotten declined after the fact, right? So we've issued this pre-approval letter. None of them have been declined after the fact.
No one's lost their job.
No one's lost their job. The deals have closed. Out of the 198, I think it was 10 of them didn't close. But when I looked at the reasons behind why they didn't, all of them were around whether there was an issue with an inspection. So somehow they still got an offer accepted with an inspection, and the inspection, after the inspection had died. I think 3 of them may have gone and closed with another bank. They had a preferred bank that they wanted to work with, and they went and closed with them. And then the other ones were all seller buyer related issues that they couldn't come to terms on. So
something could have taken place during the walkthrough or something.
A title related issue.
The title issue.
Yep.
Exactly. Right. Right.
So again, I think in this marketplace, the idea is, will this transaction close? And, by doing that full underwriting up front, we're eliminating any surprises, right? And we're also eliminating the mistakes that can be made in qualifying. Oh, the borrower told me they make $5,000 a month, but then we calculate the income and they make $3,000, right? That's all done. So there's no surprises that are coming. There's no gotchas. These deals are very secure in that sense. And, I think that as we continue to see the momentum build around this, we rolled out the pre-approval program for just a standard borrower who could put 5% down or 3% down.
So that would apply to FHA loans.
Yep. FHA, VA, conventional, USDA. I don't think we've seen any USDA ones come in yet because that's more property specific. So, but I looked at those numbers and, we've done the most conventional pre-approvals. Now, those are the ones that don't have the large down payment to put for an earnest money deposit. And the difference between our Cash Plus and our pre-approval program is that it's the down payment amount. And in those instances, whatever the borrower is qualified for, let's say they're qualified for a 95% loan to value, that 5% is what they're going to put down as their earnest money deposit. In some instances, that's $5,000. Some instances it's 10, some instances 20, depending on the purchase price. But that 5% is what they're putting down for their earnest money deposit. We're giving them the loan at 95. So we've done 17 conventional pre-approvals. Now, these are the borrowers that, again, standard otherwise would be shopping with a standard pre-qual letter. Their offer may not be as strong when presented. And out of those 17, 7 of those have gone under contract already. Now, mind you, we've only been doing the pre-approvals for 2 months. Right. So 7 of those 17 borrowers were able to get their offer accepted because of the strength of that fully underwritten mortgage commitment. And the same goes with the pre-approval program, right? If that borrower has the funds and is willing to guarantee the appraisal, they can write it not subject to a mortgage commitment because, again, they're guaranteeing that appraised value on the property.
And I think, Joe, you bring up, a great point. So, for any buyer that is serious about buying a house, whether they go Cash Plus, the pre-approval program, the realtor needs to make certain that their buyer has at least done one of those programs with us, because it's going to allow that buyer to compete in such it's still, as we just talked about, it's a competitive marketplace. The summer is probably going to be very much that, same way. So make certain that, that you get your buyer over to GRB so we can put them through one of these programs so that you can put them in a position to win.
Yeah. And I think too, it really makes that buyer invest, right? They're now they've provided documentation. They've basically gone through a full mortgage underwrite, which in the past people have equated to getting a root canal. So we try to put those buyers, not a GRB, of course, but we try to put those buyers, give them some peace of mind while they're shopping, right? Your mortgage financing is done, right? Because the last thing you want is the buyer to be worried about, oh my God, is my mortgage going to get approved after I go through and I've written 20 offers. I've finally got a contract accepted, and now I'm worried that my mortgage is not going to get approved, right? We're doing that up front. We're taking that right off the table. And we're also max qualifying them, right? So when we underwrite those loans, we're saying at a 45% DTI, right? Because we want to give a little bit of a buffer in case taxes are a little bit higher or they want to inch up their purchase price. But at a 45% DTI, we're max qualifying them. So we're saying, and a lot of times a buyer will come to us say, I want to buy a $100,000 house because I want my payment to be $1,000 a month. But we're saying, all right, let's pre-approve you for the most that you can get pre-approved for, because you may find that $125,000 house that you fall in love with, and may increase your payment by $50 a month, but you can afford it.
Yeah. The last thing I just want to chat about with this, Joe, is just speed. So today's Friday.
Yep.
People will be out looking at homes this weekend, and we know the calls are going to come potentially this weekend, or at the very latest sometime first thing on Monday. Hey, my client, the Joneses, they want to put an offer in on this house. The offers are due by 12 o'clock on Tuesday. Obviously we want to be able to have as much time as we can to get these transactions done. But, maybe just, share just, a little bit about, because I think some of the folks have been, is this going to take weeks and weeks and weeks to get this done? Yep. Typically how long it takes to get this done. But if we need to move on a dime, how we've been able to do that as well.
Yep. So our average turn time right now from the time a loan officer says, I want to push this borrower in for pre-approval, is 3 days. Now, our processors do a little bit of work, right? They look at the loan, make sure everything is ready, and then they move it into our underwriting department. So, that typically will take a day. If they need something from the borrower, that may extend the time a little bit, right? The loan officer does their best to get their documents up front. But if there's one item that's missing or, one thing that's needed, they'll go back, get that from the borrower. But our average turn times on these is 3 days. Now that's every transaction, right? So if there was a stickier file that took 12 days because the buyer wasn't cooperative and, they weren't providing the documentation, that's counted into that average.
Right.
But for the most part, on average, it's taken about 3 days to approve these. And which is actually, you think about you're going through a full mortgage process, which usually takes 30 to 40 days, right?
Right.
So we're turning these around in 3 times. We're prioritizing them. We will and do often accommodate, that Monday morning, hey, I got a buyer coming in hot. I need to get it offer done by 5 o'clock this afternoon. Not preferred way of doing things, right? But we will accommodate those. And I think the other side of it is if you ask the processors, the underwriters, on these files, they love these files because now when that borrower goes under contract, all they need to do basically is get homeowners insurance and they're done. And so that helps them, those move through so much quicker and smoother through the rest of the loan process. It just takes some of that pressure off of everybody when you think about the timelines that are usually in front of us on those. And it allows, agents to say, I know this is a cash plus. I know I can close it in 30 days as long as you guys can provide the title documents, right? So it helps us move those loans through the process. But yeah, the average turn time to get that cash plus approval right now is 3 days, which is fast.
That's great. Now the team's doing a great job. Well, just to wrap this up, just want to remind everyone, again, please reach out to us. The data is there. We want to share it with you. We're already off to a great start in June. We will come back 30 days or so from now to share with you what transpired, in June. And I think, what we want to continue to recommend, Joe, is to make certain that you're using this information to educate your seller, your buyer on what's going on in the marketplace today. But GRB is excited to partner with all of you. We want to make sure that your buyers are put in the best possible position. And we want to make certain that we keep them excited, about, buying a home, because real estate, owning a home long-term is always going to be better than renting. And we want to be part of that solution.
Absolutely. And, I think we got some exciting things coming up on the podcast, Mike. I think we got our 3rd On Location podcast next month.
Oh, that's right. We're going to be at the Bills camp.
Nope, not Bills camp.
Well,
You're spoiling it. You're spoiling it, Mike.
I'm getting ahead of myself.
We're going to be in Skinny Atlas.
Oh, Skinny Atlas. That's right. Yes. So next month we're going to have, this will be our 4th annual boat cruise.
Yep.
On Skinny Atlas Lake with a lot of our awesome referral partners in Syracuse.
And we may or may not, a bunch of mortgage people and real estate agents may or not take over the Sherwood Inn.
The Sherwood Inn. Yep. We're super excited about that as well. So, well, Joe, listen, thanks again. Great intel. And we look forward to talking with all of you on our next podcast. Have a great day.
Thank you.
Thank you.